In India today, getting married often depends on whether you own a house, not your personality, job, or how much you love someone. It all comes down to one simple question. Apna ghar hai? Do you have a house? Those three words carry more pressure than a 30-year home loan. They dictate relationships with parents, personal identity, and the exact timeline of a young person's life. An entire generation is now being forced to quietly give up on their most deeply ingrained dream. It happens everywhere, especially during wedding season. A brightly lit banquet hall in Ahmedabad, uncles discussing politics near the food counter, aunties judging outfits. Everything feels entirely normal. Then Aman walks in, a 29-year-old software engineer with a great salary. He and his girlfriend, Nisha, have been together for 3 years. Both families approve. Marriage is an absolute certainty. As they greet relatives, an uncle smiles and asks the inevitable question, "When's the wedding? And where will you both live?" Aman answers honestly, "We're staying in a rented apartment for now." For a second, the circle goes quiet. Then comes the response. "Rent pe kyun? Apna ghar to hona chahiye." Why rent? You should have your own house. The conversation shifts instantly. Nobody asks about Aman's career trajectory. Nobody asks if the couple is actually happy together. The sole focus becomes the property. In modern Indian society, adulthood remains culturally unverified until you possess the address proof of a home you own. You might have felt this exact judgment yourself. Maybe it happened during a family function, looking at marriage proposals, or lighting sparklers on Diwali. It creates a paradox. A young professional today can earn well over $1 lakh a month, yet still fail to achieve what their much lower-earning grandparents managed with ease. For earlier generations, a house represented absolute security. It was family honor. It was the physical proof that decades of struggle meant something, a place where photographs stayed on the walls for a lifetime. This created a highly predictable life plan passed down to us. Study hard, get a good job, buy a house, get married, and raise a family. Go back 25 years. Aman's father was a government employee. When he bought his first apartment, the EMI was manageable on a single salaried income. That property became the family's financial anchor. It paid for Aman's education and secured their standing. Naturally, parents expected their children to follow that exact same path. But the math supporting that script no longer works. Today, house hunting is a daily, almost masochistic routine. You wake up, grab a coffee, open a property app, and start scrolling. A 2-bedroom apartment lists for 1.85 crore. Another is 2.1 crore. You find something affordable, but it requires a 2-hour commute each way. Another is under construction, with possession promised in 2031. When you actually visit a modern developer's sales office, it looks like a 5-star hotel lobby. There is free espresso, luxury sofas, and an enormous glass scale model of an upcoming township. A smiling salesman walks over and points to the model. He tells you the unit was 1.82 crore yesterday, it is 1.89 crore today, and by next month, the price will rise again. You realize you are no longer working toward a fixed goal. You are running toward a finish line that accelerates away with every paycheck. That realization changes your search. Instead of looking for another apartment, you open your laptop and type, "Why are houses so expensive in India?" This chart shows what you would normally expect. Standard economic variables like inflation and population demand slowly pushing housing costs higher over time. But those numbers do not explain the current market. The real drivers are hidden structural factors. An intricate web of arbitrary builder profits, black money parking, approval delays, and artificial land shortages designed to restrict supply. You expect a simple real estate market governed by supply and demand. Instead, you find an opaque, complex economic mystery. These unseen market forces are quietly dictating how millions of young people navigate their relationships, delay their marriages, and alter their plans for having children. To understand exactly how we got here, we have to look at the specific mathematical equation that dismantled the middle-class dream. Late into the night, long after visiting a new property development, Aman couldn't sleep. He stared at his ceiling, replaying one number over and over in his head, 1.89 crore rupees. He began running through a mental checklist of his life choices. He wondered if he should have studied harder, switched multinational companies earlier, or pushed for a 2 lakh monthly salary instead of settling for his current pay. For millions of Indians facing unaffordable milestones, the default reaction is to look inward. We internalize the struggle. We assume a personal failure in our work ethic or ambition, rather than questioning if the market itself has broken. The next morning, Aman called his father, Rajesh. He wanted to understand the financial reality of a government employee building a life decades earlier. Rajesh bought the family's first apartment for 9 lakh rupees. At the time, his monthly salary was about 18,000. This chart compares the two generations. Aman earns 1.25 lakh a month, a salary 7 times higher than his father's. But property costs move differently. Today's apartment costs 1.89 crore rupees. The price of an ordinary home grew 21 times over. Homeownership today is determined by the growth rate of housing relative to wages, a gap that has widened significantly over the last 3 decades. Young professionals are not failing to progress in their careers. The raw mathematics of the real estate market have simply detached from modern wages. Imagine training for a race. You put in the hours, you improve your diet, and you get faster every year. But as you run, someone continuously drags the finish line further into the distance. Salaries for modern professionals have grown, but urban property prices have accelerated at a speed that renders hard work insufficient on its own. Economists track this using the price-to-income ratio. This model shows a buyer earning 10 lakh rupees a year looking at a 1 crore rupee house. It takes 10 blocks of annual income to match the property. If that same house triples in price while wages remain flat, the required lifetime earnings pile up to a 30-to-1 ratio. This expanding ratio acts as an invisible ceiling, keeping the middle class locked out of homeownership, regardless of how diligently they attempt to save. Aman's father spent a few years saving to secure a manageable loan and eventually achieved stability. Today, the initial hurdle for a buyer is simply figuring out how to qualify for a mortgage in the first place. This creates a generational paradox. Today's youth inherited cultural advice to study hard and buy a house, but they stepped into a radically different economy. It is easy to assume that real estate is overwhelmingly expensive everywhere, and that this is just the normal cost of modern living. While housing is difficult in major cities globally, international researchers consistently find several Indian metropolitan areas ranking among the least affordable in the world relative to local wages. This comparison shows 2 engineers earning average salaries in their respective regions. The Indian professional must dedicate a significantly larger share of their total lifetime earnings to secure an urban apartment than a counterpart in Germany. Young Indians are competing in one of the world's most skewed real estate markets, where property prices have outpaced local inflation for years. Committing to a high EMI requires everyday sacrifices. It means fewer family vacations, staying locked into a specific job, and having less surplus income to support aging parents. A signature on a 30-year mortgage buys a physical address, but it also dictates a buyer's personal freedom and risk tolerance for the majority of their adult life. Yet the pressure persists. At every family wedding, home ownership is paraded and celebrated as the ultimate proof of adulthood. Driving home from one of these celebrations, Aman's partner Nisha wondered if society would always view them as incomplete if they remained lifelong renters. Modern home ownership often requires trading personal flexibility for a physical address, prioritizing a cultural milestone over the freedom to take risks or switch careers. For decades, the Indian middle-class equation was clear: study hard, get a secure job, buy a house, and secure your future. That roadmap worked reliably for the era it was creating in. It simply failed to update when the underlying economic rules shifted. Young buyers carry a quiet guilt because they don't realize the system changed. They are playing a substantially harder game than the generation that handed them the advice. This reveals a paradox. Despite the urgent demand for middle-class housing, construction remains focused elsewhere. The answer lies at the construction site. The real estate market is not driven by the demands of the middle class. It is driven by hidden business incentives. The vanishing Indian dream is the direct result of a deliberate business model. To understand why developers build luxury towers while ignoring average buyers, we have to look directly at the economics of building a city. You start the morning scrolling through property apps, looking for a simple two-bedroom apartment near your office. But everywhere you look, the advertisements promise something else entirely. You aren't searching for an infinity pool or a private theater. You just want a normal balcony and a place to call home. Yet exclusive resort-style living is all that seems to be built. When you see that disconnect, the logical conclusion is straightforward. Developers are greedy, and they only care about catering to the ultra-rich. But that raises a massive economic contradiction. Millions of young Indian professionals are desperate to buy ordinary, middle-class homes. If the demand for that product is so incredibly high, why are developers ignoring it? Framing builders as villains creates a convenient target, but it obscures the actual mechanics of real estate. To understand why those apartments are vanishing, we have to look at the systemic forces driving up the cost of concrete and land. Let's step out of the buyer's shoes for a minute. Imagine tomorrow you take charge of a major real estate development. Before a single shovel hits the dirt, you are already borrowing hundreds of crores from banks. You have to acquire expensive land, hire armies of architects, bring on engineers, and retain legal teams. The clock starts ticking immediately. Long before a single brick is laid, your project is hemorrhaging money every single second. Now, your team sits down and presents you with two paths forward. Option 1 is building a high-density project with smaller units, squarely aimed at middle-class professionals. Look at the financial projection. Despite demand for affordable units, your profit margin caps out at 10 to 12%. Now look at option 2. Building premium apartments with sky lounges means selling fewer units, but the profit per unit effectively doubles. You have hundreds of crores of borrowed capital on the line. Which project are you going to approve? The absence of affordable housing is not a moral failing. Businesses predictably follow financial incentives, and right now, the math heavily favors luxury builds. The high price tags on these new developments do not translate to pure, unearned profit slipping straight into a developer's pocket. Beneath the surface of every project is an invisible ledger. Developers face massive pre-construction costs, from initial land acquisition to the grueling multi-year process of securing environmental clearances. During every month of bureaucratic delay, the interest on those massive bank loans continues to relentlessly tick upward. It operates exactly like opening a restaurant. You must spend millions to build the kitchen, furnish the dining room, and pay staff, long before a customer even looks at a menu. Carrying the weight of those sunken costs, you aren't going to sell your product at the absolute cheapest price. You are going to structure your pricing to maximize recovery. Because these pre-construction costs are so astronomically high, attempting to build low-margin, affordable housing becomes financially reckless for developers. The middle-class housing supply dies before it even reaches the planning stage. Then there is the most rigid constraint in the equation, the physical space of a city. In major metropolitan areas, buildable land is fiercely expensive. Whatever exorbitant premium the builder pays to acquire that dirt is never absorbed into their operating costs. It is passed directly down the line. Think of it like a pizza. If the wholesale price of cheese doubles overnight, the restaurant doesn't take the hit. The final price goes up. In real estate, the consumer paying for those inflated urban land values is the young professional trying to buy their first home. Even if a builder manages to acquire a massive open plot capable of housing hundreds of families, they immediately run into another wall. Urban zoning regulations strictly enforce artificial ceilings. Builders are legally limited in the number of floors they can construct on a given plot. This chart illustrates the spatial consequence. As population demand rises, it slams directly into that rigid regulatory ceiling, drastically reducing the number of people the land can legally hold. When you pump massive demand into a strictly capped housing supply, the laws of economics dictate that prices will inevitably skyrocket. The traditional milestone of owning a home is slipping away, not because a new generation stopped working hard, but because hidden regulations, skyrocketing land values, and strict business mathematics moved the finish line permanently out of reach. Aman came home that Sunday morning and bypassed his mortgage calculator. His mind was occupied by a visual paradox he'd just witnessed, a strange disconnect between the city's skyline and its residents. He had spent the morning driving through Ahmedabad's most premium neighborhoods. Tower after tower of modern, expensive real estate stood before him. But despite the luxury, the balconies were bare. windows were dark, and the parking lots looked half deserted. This pattern repeats across India's major cities. Millions of families are desperately searching for affordable shelter, while at the same time, millions of completed luxury homes remain completely vacant. To find the cause, you have to look at the buyers. A regular buyer seeks a home to live in, but an investor often buys multiple apartments with no intention of moving in or even finding tenants. They are betting on the property value increasing every year. Real estate in these sectors has stopped functioning as basic shelter. Instead, these buildings behave like physical stock portfolios or bars of gold, assets designed to sit empty, waiting solely for the market price to rise. The market is driven by forces that go beyond simple investment. Aman's honest, tax-paid savings are secretly competing against massive hidden reserves of untaxed wealth flowing into the housing sector. When a seller can choose between a salaried professional and a buyer with ready cash, the decision becomes easy. The person relying on the formal banking system is immediately at a massive disadvantage in a race hard work alone cannot win. To hide this wealth from the authorities, many turn to benami ownership, the ultimate cloaking mechanism for the housing market. Under this practice, property is registered under a relative or a fake name to hide the true source of the money. While laws now strictly prohibit this, the legacy of proxy ownership has allowed investors to park wealth out of sight, removing these homes from the legitimate housing supply. When real estate acts as a vault for illegal wealth, prices lose their connection to reality. They stop reflecting what the working middle class can afford and begin serving only the needs of investors. Even if the buyers were all honest, the system itself adds layers of hidden costs. When friction enters the construction process, it is always the consumer who pays. Builders must navigate a gauntlet of bureaucratic approvals, from environmental clearances and road access to water and electricity connections. When approvals delay, project finances collapse. Loan interest compounds, machinery sits idle, label costs rise. Delays turn into debt. These inflated costs never disappear. Builders pass them down, adding lakhs to the buyer's EMI. This friction becomes a permanent tax on the young family. The human cost of this friction is seen in stories like Nisha's. She booked a flat in her 20s, expecting to celebrate Diwali there 3 years later. But instead of moving in, she spent years staring at a concrete skeleton. This is a double financial penalty. Buyers are forced to pay rent for their current homes, while simultaneously paying the bank loan for a house they cannot occupy. Systemic corruption and inefficiency don't just steal money, they steal the peace of mind and the prime earning years of an entire generation. To explain these prices away, many point to the size of the crowd. There is a common assumption that India simply has too many people for its land. Yet other densely populated countries do not face this same level of housing unaffordability. Population is a factor, but it isn't an excuse for a broken market. Affordability is driven by how land is used, how property is taxed, and how investment is regulated. When zoning laws are broken and investment hoarding goes unchecked, the crisis accelerates. The current crisis is not a mathematical certainty of population density. It is the engineered result of a system that prioritizes capital over residents. As Aman closed his laptop, his initial anger was replaced by a crushing sense of disappointment. He was grappling with the shattering of a core belief, the idea that hard work, paying taxes, and following the rules would lead to a secure life. He realized that the game was effectively stacked against ordinary buyers. This realization changes how a society views itself. When the most basic sign of stability, a home, becomes an instrument for hidden wealth and bureaucratic friction, it shifts the way people measure success. Because the market has turned property into the ultimate status symbol, society has shifted its focus. We have begun to prioritize the prestige of a residential address over personal fulfillment, ranking people by the society they can afford to enter. If the rules are rigged and the financial pressure is so high, why do millions still willingly sign 30-year loans? To find the answer, we have to look past the economics and into the deep human psychology of social status, societal pressure, and the terrifying fear of simply being left behind. We'll explore that in the next chapter. After analyzing the market, Aman hit a wall. Real estate had become overwhelmingly expensive, but the usual suspects, greedy builders, systemic corruption, and population growth, didn't fully explain the math. Despite the barriers, millions of buyers remained desperate to get in. The drive to buy isn't rooted in economics, it's rooted in psychology. We rarely buy objects purely for their utility, we buy them for the meaning attached to them. This chart highlights how peer comparison escalates over time. 5 years ago, Aman and his college friends would sit around comparing their smartphones. A few years later, the focus shifted to cars. Now the stakes are higher. Someone books a flat in Noida, another secures possession, a third mentions a property value jumping by 20 lakh. When the group inevitably turns to Aman to ask about his own real estate plans, he freezes. He isn't broke, he earns a good living. But sitting in that circle with nothing to report, he feels a distinct sense of embarrassment. Notice the exact questions people ask. Nobody checks in on your progress toward financial independence. They ask, "Apna ghar kab le rahe ho?" When are you getting your own house? Without any official vote or declaration, owning a home has mutated from a basic human need for shelter into a mandatory societal scoreboard, one that everyone feels compelled to play on. 6 months later, Aman and Nisha get engaged. The two families sit down together in a living room to plan the wedding, working through the guest lists, the jewelry, and the catering. The logistics are smooth and the mood is celebratory. Then, an extended family member casually asks where the couple plans to live after the wedding. Aman's father mentions they are currently looking for a flat to rent. The reaction is immediate. Nisha's aunt rejects the idea outright. Renting is dismissed as inappropriate. The clear cultural directive is that marriage automatically demands homeownership. That night, Nisha lies awake. She isn't thinking about flower arrangements or her wedding dress anymore. Her thoughts are completely swallowed up by EMI calculations, down payments, and interest rates. Nobody in that room intended to cause harm, but that single offhand comment shows how deeply this conditioning runs. Harmless family expectations are easily weaponized, taking one of the happiest moments of a person's life and compressing it into a suffocating math problem. Psychologists refer to this behavior as social comparison. We are incapable of judging our own lives in a vacuum. We constantly look sideways to see how we measure up to the people around us. The triggers for this comparison are built into everyday life. A neighbor moves into a new complex. A cousin upgrades to a villa. A colleague posts a grinning selfie holding a fresh set of house keys. In an instant, the internal monologue changes. You stop asking if a house makes sense for your personal budget, and you start wondering why you are the only person who hasn't secured one yet. Social media accelerates this cycle. People only upload the housewarming parties, the luxury kitchens, and the balcony sunsets. They edit out the sleepless nights, the financial anxiety, and the crushing debt underneath. When you hold your unedited, everyday reality up against someone else's carefully curated highlight reel, it creates an artificial panic. You convince yourself you are falling behind, even when your finances are perfectly healthy. Real estate sales teams know exactly how to exploit that panic. Eamon visits a property and gets the standard pitch. There are only 2 units left, and the prices are strictly going up on Monday. Whether the scarcity is genuine or completely fabricated, the phrasing is designed to bypass the analytical part of the brain. It triggers a physiological survival response rather than a calm mathematical calculation. That response is the fear of missing out. Once that fear takes hold in a negotiation, basic logic quietly exits the room. Think about how people shop. If you buy a 500 rupee t-shirt, you check different stores, read reviews, and scrutinize the fabric. But scale the purchase up to 2 crore rupees, and suddenly the magnifying glass disappears. The reason is the heavy baggage attached to the concrete. A house represents identity, family stability, and social respect. Evaluating those concepts objectively feels wrong. This emotional hijacking explains the irrational behavior seen across the market. It is the exact reason buyers routinely stretch their budgets, ignore glaring red flags, and accept dangerous levels of debt based purely on blind hope. Aman decides to test this hope against reality. He sits his father down on a Sunday morning and asks a direct question. If he were his age today, would he still buy a house? For a long minute, his father just sits in silence. When he finally speaks, the traditional parental certainty is gone. He admits he just doesn't know. This chart highlights the structural difference. When Aman's father bought their home, payments were a stretch but left enough to live normally. If forced to sacrifice over half his income for a single asset, his father couldn't have survived. The modern housing market has detached from the economic realities of the previous generation. Young buyers are exhausting themselves chasing a historical, romanticized ideal that simply no longer mathematically exists in the real world, which leaves a difficult question to answer. Are you chasing a house because it aligns with a concrete financial plan, or are you doing it because everyone around you expects you to? The danger appears the moment a neutral lifestyle choice, like renting, is weaponized by the culture and treated as a moral failure rather than a math problem. Amin and Nisha gather their salary slips, tax returns, and bank statements, years of hard work dropped onto a bank manager's desk. They sit down for the meeting with one clear assumption. They believe the only hurdle left is finding out if they can afford the sticker price. But the bank manager isn't going to talk about the sticker price. Instead, he introduces a completely different set of rules about how money and debt actually function. Being able to scrape together a monthly payment does not equal financial safety. As Amin and Nisha are about to discover, the most expensive part of buying a house has absolutely nothing to do with the physical property itself. Tuesday, 11:30 a.m. Amin and Nisha walked into the bank carrying a blue folder. Inside were 6 years of salary slips, tax returns, bank statements, and promotion letters. They had documented proof that they had done exactly what society asked them to do: study hard, find a stable job, save your money. After years of following the rules, they felt it was time for society to keep its promise. They were ready to buy their first home. The bank manager welcomed them, opened his calculator, and asked for their target price. They told him, around 1.8 crore rupees. Look at this calculation on the manager's screen. The monthly EMI dwarfs their current rent. The gap between what they pay now and what the bank requires is massive. Technically, the manager tells them, they qualify for the loan. But personally, he advises against stretching their finances this far. Amin asks the obvious question: if they qualify on paper, why shouldn't they buy it? The manager leans back and says something unexpected. A bank approves loans. It doesn't approve peace of mind. When your salary arrives on the first of the month, looking at those stacks of cash gives you a tangible feeling of wealth. For exactly 3 seconds, you feel rich. But watch how quickly this solid block splinters. Reality begins immediately. EMI, electricity bill, school fees, groceries, insurance, internet, unexpected repairs. Suddenly, your salary isn't yours anymore. This feeling of being trapped stems from every rupee having a destination before you even earn it. When you borrow money from a friend, you naturally assume that returning a little bit every month reduces your overall debt evenly. But home loans just don't work like that. Think of a long-term loan like a climber on a mountain. Early on, almost all heavy financial output roots into the interest backpack, not reducing the principal. That's why homeowners are shocked 10 years later. Despite paying lax, the debt mountain remains enormous. They are making progress, but the mathematical structure of long-term amortization is designed to exhaust your cash early on, keeping the actual ownership process incredibly slow. Let's meet two friends, Arjun and Samir. Both are 30 years old, both earn the exact same salary, and both dream of financial security. Arjun follows the traditional path. He buys a house immediately, taking on a massive EMI that leaves him with almost no liquid savings. Samir makes a different choice. He rents a modest apartment. Instead of paying a huge portion of his income to a bank, he takes the liquid difference and invests it every single month. Real life is complicated, and the right choice depends entirely on your specific city, your income, and your risk tolerance. Some people value the stability of a deed, others value the flexibility of capital. But carrying an enormous debt changes how you behave. The obligation acts as golden handcuffs, making you hesitant to take risks, less willing to start a business, take a career break, or relocate for better opportunities. Financial stress quietly dictates career choices. For many families carrying large mortgages, the house that promised ultimate freedom actually restricts it. One evening, Aman visits his parents. His father tells him that paying rent is throwing money away. Aman replies, "Is paying massive interest to a bank not throwing money away too?" Neither of them is completely wrong. Aman's father grew up in a different India. Look at these dense urban streets. Decades ago, buying property early in these growing neighborhoods made excellent financial sense. But the rules have changed. Today, every modern city, every salary bracket, and every single property requires its own hyper-specific calculation. Look at that initial brochure price. It quickly multiplies into registration, stamp duty, taxes, maintenance, and insurance. But the heaviest costs aren't financial. That property is built of lost weekends, skipped vacations, unstarted businesses, and quietly sacrificed choices. Ultimately, you pay for a house with your finite time. That night, Aman called Nisha. After a few seconds of silence, she told him what she was thinking. "I don't want a house. I want a life." Somewhere along the way, they stopped dreaming about living. They started dreaming about qualifying. Qualifying for a heavy loan, qualifying for an address, and qualifying for society's approval. What if the ultimate goal of homeownership, the one they had been conditioned to chase their entire lives, was the entirely wrong finish line? If buying a house isn't always the smartest answer, what is the alternative? Are there places where ordinary people don't spend half their lives exhausting themselves for one apartment? There are. Look at European apartment blocks in Germany. You see a culture that solved this exact housing dilemma using completely different rules. Or look at the sprawling density of Japan. They broke the real estate rulebook to accommodate millions without forcing them into lifelong financial traps. In the next chapter, we will look at how these countries made homes for people, while others turned homes into financial investments. And the lessons they offer might change how you view your next address. When Aman sat down with his friend Rohan, who had recently returned from Singapore, the conversation eventually turned to real estate. Aman joked that buying a flat there must be impossible. Rohan agreed that private property is indeed out of reach for most, but then he mentioned something unexpected. Most Singaporeans don't even participate in that market. In Singapore, the government develops a massive share of the housing supply through long-term public programs. Because the objective isn't to maximize developer profit, they can focus on making homeownership accessible for average income couples. These developments function as integrated infrastructure. Schools, parks, and metro stations are planned to grow alongside the homes. Today, the vast majority of Singapore's residents live in these public housing communities, treated as an essential service rather than just a luxury. In Germany, the culture is built around renting. It's a socially accepted choice, supported by strong tenant protections and long-term stability. Families build entire lives in rented homes without the social pressure to buy immediately, treating it as a legitimate way of living rather than a temporary stop. Japan offers a different perspective entirely. There, houses often lose value as they age because the land is considered the primary asset. This removes the incentive to treat a house as a lifelong investment that must appreciate, encouraging people to buy homes simply to live in them. These examples show that treating housing strictly as a high-growth investment isn't an economic law, it's a choice. Other advanced economies have found ways to decouple the need for a roof from the need for a speculative asset. India's current affordability crisis is the result of several massive pressures colliding. We have a young population, rapid urbanization, and a regulatory environment that often struggles to keep pace with the sheer speed of growth. The biggest bottleneck is that our highest-paying jobs and best infrastructure are concentrated in a tiny handful of metro areas. This forces millions of people to migrate to the same few zip codes, creating an intense competition for limited urban land. Imagine every student in a school trying to sit in the front row. There are only so many seats. When everyone is incentivized to chase the same locations for their careers, prices naturally rise beyond the reach of the average salary. The challenge isn't just building more apartments in the same saturated cities. It's about creating more urban centers where people can actually build successful careers, spreading the demand across a wider map. When Aman struggled to afford a home, he felt he was falling behind. But the math shows that his situation is the outcome of this structural bottleneck. He isn't fighting a lack of discipline. He's navigating a market where the supply of opportunity is physically constrained. Instead of asking, "How do I buy a house?" we might need to ask, "How do we make housing affordable again?" Solving that requires moving beyond individual saving strategies and looking at systemic changes. That means faster approvals for builders, smarter land use, and better public transport. If people can live farther away without losing hours commuting, the pressure on city centers begins to ease, making the entire system more balanced. Aman's father, Rajesh, eventually shared a different perspective. He admitted that while buying a house gave them stability, it didn't solve all their problems. The house was one chapter of their lives, not the happy ending that erased all future worries. There is a generational belief that life only truly begins after you own property. This puts immense pressure on young professionals, making them feel like their current successes are incomplete until they are backed by a deed. We are measuring our lives against a metric that hasn't been updated for today's economy. Realizing that your worth isn't tied to an EMI is the first step toward finding a more sustainable path to stability. For our parents, a house was the ultimate security in a world of stable jobs and smaller cities. But today, jobs change faster, people move more frequently, and the economy moves at speed that the housing market often can't match. Look at these two paths. On the left, a 30-year debt can anchor you in place. It might make you hesitate to take a career risk because you can't afford to miss a single payment. The path on the right uses renting to keep capital liquid. It allows for mobility, the freedom to change cities for a better job, or invest in diverse assets rather than putting everything into one building. Success is no longer defined by a single permanent address. In a fast-paced economy, the real advantage is the freedom to choose your own life and adapt as your career evolves. At his wedding, when an elderly relative asked when he was buying a house, Aman didn't feel embarrassed. He simply said they would do it when it was the right financial decision for them. He was making a choice based on his reality, not on social expectation. He looked at an old photo of his parents' first apartment. It was tiny, with bare walls and plastic chairs. They didn't have much, but they were building a life together. His father reminded him that the house was just a container. It gave them a place to build memories, but the memories themselves were always the more valuable asset. The crisis we face isn't just about high prices. It's about how we define a person's success. We often celebrate the physical address while ignoring the financial security and peace of the people living inside it. If you're renting and wondering if you're falling behind, remember that you're living in a completely different economy with different rules than the generation before you. A home is meant to protect your future. If the path to owning one becomes the very thing that makes you fear for your future, it might be time to rethink the goal. Take a look at the room you're sitting in right now. Whether you own it or rent it, ask yourself if it provides you with a sense of peace, because in the end, that was always the real dream. We have tied human worth to property deeds for a long time, but a home should be a place where life begins, not a financial burden that prevents you from living it.